Can you comment on the impact that recent IPOs have had with significant value loss post-IPO on the PE market and willingness to invest? Is this the new norm, overall poor valuation, or can you expect a future shift in this trend?
A great question. The IPO markets are actually not where a lot of the value creation happens for private equity writ large. So it ends up on the front of the Wall Street Journal pretty frequently. And it's always exciting to see it there. And the big booms and the big busts get a lot of airtime and a lot of press. But the reality is that for a lot of the sponsors we work with, their exit isn't an IPO or a public offering. It's a sell to another private equity sponsor, or it's a sell to another strategic acquirer. The volume of middle market and lower middle market deals that transact inside private equity or to another sponsor or to another strategic, much greater than the volume of deals that go to the public market and then succeed or fail. The other side of that is a lot of times private equity has sneaky ways to get as much of their money out of that deal at the IPO as possible. So even if the IPO fails kind of post coming out, they've still captured some significant value. The IPO markets are tricky right now. We haven't seen a lot of good IPOs, and it hasn't been a good way for sponsors to exit. It's one of the reasons we've seen a climb in the hold cycle. But I don't think it's going to drastically change how private equity is looking at exits. And it certainly hasn't seemed to change the way the institutional sponsors are considering their private equity allocations.